Hi there, welcome to my channel again. My name is Romeo Clark. On this channel, we teach you how to maximize on your taxes and save a ton of money, right? So today I have a great topic for you. I'm going to introduce you to a tax savings case study that I did with my client in 2023. Let's go. All right, so join me on this journey as I show you how I saved my client Linda and Larry over $162,000 in 2023. Let's go. So meet Larry and Linda. Larry is a doctor. He earns W-2 income of about $400,000. As a couple, they also have 4 kids, right? In addition to the $400,000 that Larry earns, they also have holdings in real estate. Those holdings generate $150,000 in income. They also have an e-commerce store that generates $200,000 in income, and they also have other investments that generate $100,000 in income. Now let's dive into the totals of these earnings for the year of 2023. They have W-2 income 400, real estate 150, e-commerce 200, other investments 100. If you add all this up, it's $850,000 in income. Now that's a lot of income, but they have 1040 deductions. They're itemized deduction, which give them additional $50,000. So that brings them down to $800,000 in taxable income. Now, if we look at our progressive tax system here in the US, right, your income is taxed at different rates. So their effective tax rate based on this income level is about 28%, all right? So if we take 28%, multiply into the 800,000, we get a tax bill of $226,449. So if Larry did nothing with his wife, you know, the situation would be he would have to pay this entire amount over the year of 2023 to get applied to their 2023 taxes that they'll owe. So I said, you know what, let me meet with the client and talk to them about the tax savings opportunity that could help them. So I met with them on March 14th and we talked about the possibilities. So here are the possibilities that we came up with. We came up with some core strategies and some other smaller strategies, but these are the big ones that I'm going to talk you through today. We went over income shifting. So income shifting is basically taking income from a high earner, which would be Larry and his wife at this time, Linda, and then shifting that to those 4 kids that we show you earlier, or any other family member that has a lower tax bracket. So we're trying to take advantage of those tax brackets that are lower than the taxpayer. So that's the first thing that we looked into and one of the strategies that we use. The next thing is the business deductions. Now remember, Larry and Linda, they also have e-commerce business, right, that they have deductions in. And they also have the real estate business, okay? So we really have some opportunities here to make sure that they're taking advantage of deductions. So they did have a lot of deductions that they weren't taking advantage of. So we broke that down and we came up with a tax savings there for them. So just, I'll go over those numbers here shortly. Then entity selection. So on the entity side, you know, them having the e-commerce business, them having the real estate business, right, with these ventures and other investments, we want to look at the best structure for them to both be tax optimized and then, you know, from a legal perspective to make sure that they're legally optimized. So we went through, look at the tax savings on each entity and which one is better given what their current situation is and where they want to be in the future, okay? So entity selection was a strategy we looked at, and then real estate advanced strategies. So as someone in the real estate space, you know, there are a lot of advantages for you. The government, the IRS, they really like when people invest their money, right? Especially into assets such as real estate, depreciable assets, right? So we looked at this and we were able to look at a huge amount of opportunities that are available to this couple to shuffle their life around where the wife could do some real estate work, and then they would get this huge advantage of making their income a certain type and reducing income in other areas. So that was a big strategy. So here are the tax savings that we were able to get. Now, on the income shifting side, we were able to reduce their taxes, right, by $9,576. Now, this is a number we get after applying their marginal tax rate to what the benefit was. Maybe, we were able to get the kids to shift $50,000 in income to the kids, right? We take that 50, multiply by their marginal rate. That's how we get the tax savings, right? Similarly here, business deduction, right? What amount of business deduction? If it was 50,000, we multiplied that by the marginal rate to get their tax savings. And then entity selection. Entity selection with the strategy we did with Linda and Larry, they were able to get dollar for dollar tax savings because they were getting a huge hit with self-employment tax. Self-employment tax is very big on individuals who are self-employed. So we look at entity selection, make sure that they're selecting the right entity there and reducing their taxes. Then we have real estate advanced strategy. So, they were able to change how they performed work in the real estate spaces, especially Linda, who was already doing work in the real estate space and was passionate about real estate. And we were able to get them to basically offset some of their passive income and change that income nature up a little bit to make sure that they get a higher amount of tax advantages. So that saved them $74,000, right? So when we look at it, the total tax savings for them was $162,076, right? So that's a ton of money, 6 figures there in tax savings for them. Now, I always tell my clients, when you save on taxes, don't go blow that money, right? It's your money, but listen to what you could do, right? You could invest it at 12% over 10 years into the stock market or into an IRA, right? Into some retirement tool. And guess what? Over 10 years, if you invest it and get a 12% return, that's $500,000 that you'll have just by tax savings in 1 year, 2023, right? So that's a huge opportunity here. So in summary, look at Linda and Larry. Their taxable income was reduced from $800,000 to $600,000. Pretty big $200,000 change there. Their federal tax bill was reduced from $226K to $154K. That's a huge jump. Their tax savings, therefore, was $162K. That's a huge tax savings right there. So when we break it down here, their taxable income reduced from $800K to $600K. That's a $200K difference there. Their federal tax was reduced from $226K to $154K. Their tax savings, including self-employment tax, was $162K. So their future return, if they invested this at 12% over 10 years, $500K. So these are huge opportunities for taxpayers to reduce their taxes. Listen, there's a way for you to reduce your taxes legally. A lot of CPAs, a lot of tax preparers, they don't do tax planning in and out, day in, day out, right? So they're always very cautious of taking these aggressive strategies to their clients, right? So it's important that you understand, you're educated about these strategies. If you're interested in learning more about how we help our clients, similar to this one, reduce their taxes significantly, go ahead and reach out. Can't wait to hear from you. Bye.